So there we go. Good afternoon and welcome. So I'm just going to jump straight into it today. So non-farm payrolls are back. Delayed, but back. So highly anticipated and obviously potentially maybe a little explosive, because when jobs reports get postponed, markets don't forget. They just build suspense. Traders call it monthly market earthquakes, and today the ground is quietly rumbling once again. So before you take your next NFP trade, watch this. Good afternoon, I'm Francois, your market analyst here at ATFX Africa, and this is a special edition for the market brief entirely focused on the delayed January non-farm payrolls report. What markets expect, why it matters for the Federal Reserve, and how key instruments like Euro USD, gold, and equities could react. I am going to keep the session very structured so we can get through it as fast as possible. We're going to kick off with fundamentals, then we're going to move over to technicals, and add just enough humor to keep things steady while volatility does its thing. So yeah, here we go. Headline NFP, we are expecting 70,000 jobs following the 50,000 in December. The unemployment rate is expected to stay steady at 4.4%. Average hourly earnings is expected to soften to 3.6% from the current 3.8%. However, I've got some personal input here as well. I think we are overestimating the jobs growth. I might be wrong, okay, but I do believe we are overestimating the jobs growth for NFP. I don't think we're going to hit 70. I'm personally around the 45,000 rate. That's just me. I would love to hear what your thoughts are on this, but I'm currently around the 45,000 range. So because of the fact that markets are at this point in stage, I just feel like it's low higher, low fire. You know? ADP was last week, and that already showed some weakness. The broader narrative for Fed officials have been relatively consistent. They have stated labor market appears stable and approximately in balance. Now, stable and approximately in balance to me doesn't necessarily scream growth. Okay. Hence why I'm not saying we're going to get a minus or anything like that. I'm just not at 70. Okay. Again, personal. So policymakers remain attentive, obviously, to the risk of rapid shifts. So markets are currently pricing in about a 15% probability of a 25 basis point cut in March. So today's report matters because it directly influences the specific decision. That is, rate cut expectations, US dollar valuation, risk sentiment across equities and commodities, and wage growth is especially important. Because if wages cool more than expected, that could ease inflation concerns, but potentially weaken consumer activity and tilt expectations towards earlier Fed cuts. So the question here becomes, will this report confirm balance or suggest the cooling is accelerating? Okay, now let's translate everything I just said into instruments. So for everyone who's super confused and have no idea what's happening, let's translate that into the actual instrument. So kicking things off, let's start with Forex. So currencies. Again, if there's any questions, please feel free to send them through to me. Be happy to assist. Okay. So the US dollar started February firm, okay, supported by policy stability expectations. So here's some scenario. If NFP disappoints, so in other words, if I'm right, the US dollar may come under pressure, which means Euro USD could extend higher. Okay, so that means Euro USD up. By the way, just for time's sake, I'm going to jump ahead to some of commodities here as well. Euro USD is going up, gold will probably follow. Okay, simple. If NFP meets expectations, the US dollar may actually strengthen, which could put pressure towards some support zones. Okay. Now, I actually do believe that we might see maybe on like Euro USD. And again, guys, just always remember, not financial advice. I'm literally just looking at price action, looking at charts, analyzing the fundamentals for you, and giving you my thoughts on it. Okay. Like I said, not providing advice here. I'm just kind of seeing what I'm seeing here. But For instance, on Euro USD, I am kind of expecting a spike down and then a massive spike up. Again, because I'm expecting some weaker figures. So I do think we might get a quick spike down and then a big spike up. Again, just some theory behind it, but I'm not trading that initial spike. I'm a trader, so I react. I don't predict, I react. So what I am going to do is I'm going to look at charts. We're going to look at charts together. And when we see the spike, we're going to react. And we're going to do so appropriately. Again, so the question here today kind of is, will the dollar roar or will the euro reclaim momentum and just continue higher? So as I stated as well, whatever Euro USD does, gold will do something very similar. Now, again, if we have weaker NFP plus soft wages, that would boost the rate cut narrative. Gold may find renewed support. In that NFP reaction, gold often moves alongside the dollar, hence why there's that correlation between Euro USD and gold. But, and this is why gold's my favorite, because gold just moves a little fast. Okay. It's kind of like Euro USD that drank a monster. So, yeah. I noticed CHF USD and gold are also following each other. So, Caleb, you are 100% correct. Okay. But also remember that technically speaking, CHF USD, so actually, if you have a look on the ATFX platform, it's not called CHF USD, it's called USDCHF. So the other way around, where the dollar is the base currency and CHF is the quote currency. Which, do yourself a favor, go have a look at Euro USD and USD CHF side by side or up like across from one another, and you will see they are the inverse of one another because the CHF, so the Swiss franc, very closely correlates the euro, and obviously they both have the dollar. So you will see that whenever Euro USD goes up, USD CHF goes down, and it's a very, very close correlation. So hence why I never really provide analysis on USDCHF because when I'm analyzing Euro USD, I'm kind of doing the same thing already. Okay, so just whatever you would do on Euro USD, just do the opposite on USDCHF. I hope that makes sense. Okay. Oh, because the dollar is the base currency, so it's inverse. Yes, because on Euro USD, the dollar is the quote currency, and on USD CHF, it's the base currency. But apart from that, the actual dollar, the Swiss franc, and the euro are also very, very closely correlated. Okay, cool. Indices. So equities are currently balanced. We've got earnings momentum, policy expectations, labor stability signals, strong labor data. Could obviously today reinforce a Fed hold, potentially weighing on growth-sensitive equities, like, for instance, the NASDAQ 100, where weaker labor data could revive easing expectations, potentially supporting equity sentiment. But here's the nuance. If wage growth cools sharply, markets may question consumer spending strength, which automatically then introduces a second layer of interpretation. So equities may just react to the headline. They may actually also react to what the data implies for liquidity and growth. Okay. Which is normally why I only trade equities like an hour after NFP. Because when you're analyzing companies and so forth, there's just so much more that goes into that. Okay. So 5 minutes to go. Any questions, pop them through. If not, here's what we're watching for. 3 potential outcomes. Number 1, strong print. Anything above 70,000, this would be dollar will likely then strengthen, which if the dollar strengthens, this means Euro USD down, gold down, equities cautious. Okay. If we get a weak print, so like I said, round about 45 to 40, that would mean a weaker dollar. So the dollar would soften. So Euro USD up, gold up, and equities could respond positively to rate cut hopes. Now, there's obviously also the chance for a mixed report, which I really hope we don't get, because that just complicates things. So if we do get a mixed report, I'll kind of just break it down for you. Okay. Now, let's have a look at some of the technicals. Oh, I do see there's a question, yeah. 90,000 jobs, again, that goes back to the very positive scenario. which would mean a very strong dollar. So Euro USD down, gold down, so forth and so on. Okay, so let's look at some charts. Let's look at some charts. Here we go. Okay, so currently this is kind of my range here on Euro USD. This was my original range that I drew in. We already kind of broke down lower and broke here. So just based on price action, based on momentum, yeah, I do think we'll get a spike lower eventually from here where we are. Maybe if we take this little resistance level here and we go about 20 pips, I think that 1.188 could be a spike level. And then that could be a nice buying area. So again, like I said, not trading the spike, but I will trade the reaction. So that would be a nice buying level from there onwards. If it spikes higher, this strong high, if we start seeing some rejection there, that could be some nice intraday short positions because again, the spike doesn't last forever. We normally see about 5 to 10 minutes of up and then a retracement down. So again, that will kind of be the level that I am eyeing on that end. If we have a look over at gold, by the way, I am giving a masterclass today. So kind of just explaining, for instance, how I took this trade earlier today. Again, I'm on a 1 minute time frame. So if you like horse racing like I do, come join me and I'll explain my scalp trading strategy to you. So, yes, but I mean, we've had this very, very strong support all throughout today, which has given multiple entries, some nice trades the entire time. We had that massive rally, big, fast pull down and bounce very nicely from there. So, if this kind of follows, we could get a quick bounce back down to this support area down here. Again, we've got like 50 seconds left until that happens. Or alternatively, this might just shoot back up. And then we kind of have a look again when we get back up here to 120, just how the market reacts, and we can kind of react from there on forward. Okay, so 30 seconds and counting. You guys ready? Okay, and remember when I say guys, I'm not just meaning guys, everyone here. I hope you are ready. I hope your lot sizes, your risk management, everything is correct and ready to go. I do have a question, maybe for after NFP. Okay, cool. I'll read that after NFP. We have 10 seconds. 10 seconds to see what happens. Here we go. Here we go. Here we go. 3, 2, 1. So I hope you can all still hear me. I do see for some reason my camera switched off. As you can see on the chart, 100% got the spike right. So there, that's spiking down. Even if we have a look here, Euro USD. Wow, okay. It spiked down and completely missed the TP that I put in place. Currently running 60 pips. So this is definitely a nice little scalp area. I'm even going to go to a slightly higher time frame just to see what the market is doing here. So we do have this larger support. If it does get closer to this, that could initiate some nice big pullbacks. Just want to see how things are looking here on gold. Gold is already starting to pull back. And now we can see as well here, 15-minute, there is a big support level there as well. So this could actually be a nice little jump from here. Stop loss, I would say around this 5,018 level. Can maybe go like a decent 4-1 on this, trading that back up to that specific level over there. I just want to see here, because this is my support level over here. If we stay underneath it, I might, but again, that price action looks quite beautiful there. Just increasing risk slightly because that'll kind of look something like that, which, yeah, that does look like a nice entry though, hey? So actually, you know what? I'm taking that trade. Okay, so I'm in on this. I'm just placing my stop losses and my take profits here. For some reason, my mouse doesn't want to work like it now. Always, There we go. Everything's in. So let's see how that plays out. Can definitely aim for something a little higher on the take profit side. That a little higher. Go. Okay, still a very, very nice pullback. A little late on the entry. I must say I'm not all that happy with my entry because that retracement here was just super fast. Would have been nice to get it closer to the bottom, but again, just going to sit it out from here on forward. Okay. Let me quickly see. I do know there was questions. The okay, the Epstein files and Fed announcement couldn't have caused such a significant drop in gold. Surely more uncertainty, people would buy, not sell off hard. Okay, so I'm guessing you're talking about that bigger sell-off that we had. Obviously, gold is up nicely again, but yes, we are down about $500 from the all-time high. So there's been a significant amount of things that has happened in the market, and this has influenced the market in a various amount of ways. But it's also, personally, I do feel there was a certain amount of overreaction to a lot of the news. And this has kind of caused some chaos a little bit, but also now has led to a lot of consolidation. And this is kind of why we saw such a big spike today, for instance, because now markets are reacting to all of this. And I mean, if we have a look here at our economic calendar, just to have a look at some of the results that we just got, um, unemployment actually dropped. So really good for the dollar on that end. I was way off. It didn't even come in at 70. NFP came in at 130,000, completely blowing through expectations. Definitely good, strong signals for the dollar, which is why we saw this massive move down. Again, markets kind of just react and then it just prices back into where it was. Hence why I'm literally just trading this back to that high point. Again, having hard stops in place because if I'm wrong, I'm wrong. I have to take it on the chin. So it's kind of like boxing, got to take a couple of hits. Can't just land them the entire time. So, but yeah, I do hope that answers your question on that, Caleb. Personally, I just believe it was an overreaction. Okay. I hope everyone sold. I bought and moved. Well, I did say that it was going to go down, didn't I? Again, like I wasn't providing any advice. So it's just kind of purely it's price action. It's traders. It becomes simple at some point where you just kind of see these things happen in front of you. Where based on the move, this is what it's going to do. And if you can start getting that right, again, simple things. And you'll see sometimes how markets are reacting to price action more and more and more all the time. It's just such easy movements. And as a scalp trader, it's even easier. Okay. Yes, sometimes to predict longer term moves, and that's why I don't swing trade. But to predict longer term moves becomes harder and harder. But scalp trades, easy, quick entries, I wouldn't say it's not easy in the beginning. Okay. It takes a lot of practice. It takes a lot of, time spent on charts. But once you are able to read that language of the market and read that price action on your charts, things can become very, very clear very, very quickly. I hope that makes sense. This trade's also looking very nice at the moment, running in profits. Once it actually breaks above, I would say around that 70 area, I'm going to move my stop loss to break even and just secure some profits on this trade. Okay. Other than that, traders, I think that's kind of NFP for today. We've got the results, we've got the setups. I will break this down further tomorrow in the market brief, which will also be alive tomorrow. So we will go through a lot of markets again tomorrow. If there's any specific market you want me to look at now, I'm also happy to do so. Please pop it for me into the question or the comment section. Here we can see again, like I said, look at this Euro USD acting exactly the way gold is reacting. Based on Caleb's question earlier, we can also look at USDCHF. You'll see it's the exact opposite. Like literally look at that. If you look at this chart versus Euro USD, it's literally just inverse of one another. Simple, straightforward, very, very easy on that end. Thank you very much. Only a pleasure. Okay, cool. So, traders, I kind of think that's it from me for today. As always, thank you so much for joining me. I loved having all of you here today. Um, and I do hope you found it beneficial. I really do. And I hope I'll see you again on our next session. And again, if there's any questions, even if you don't want to ask me a question here, feel free to send me a message. Just pop me an email. My email is marketbrief@atfxafrica.com. Okay. But with that, that kind of brings us to the end of our session here today, brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Now, if you want to go and experience the difference for yourself, simply head over to atfx.com. And at the moment, just because, well, February is kind of like January 2.0, ATFX is providing 100% deposit bonus on all your capital. So take them up on it. So whatever you put in, they'll double it. Again, it is a leverage bonus, so it just doubles the amount of capital that you have, but there are certain trading volumes that you can meet, and then the bonus becomes withdrawable. So you can actually make that money that gets given to you as a bonus. Just as a little quick update, just because I want to show you all before I go, just having a look here at the charts, everything running beautifully. So all I am doing right now is I am going to move my stop loss to break even so that my trade can now run risk free. So yeah, moved my stop loss into profit. So it's currently at break even. So whatever happens now happens. I'm out. So, and that's kind of one of the most amazing things about just managing your risk accordingly. Because sometimes trades go in your direction and we get so stubborn or greedy, one of the two. Okay, normally happens. And then instead of either taking profits or securing profits, you just you leave everything open. And leaving everything open is never the answer. So, yes, as stated, I hope that helps. Oh, I see there's a bunch of more questions. At least made some profits. Well done. Well done. I do see there were some nice comments there about that. Okay, cool. And not me, traders who joined. So just for those watching the recording. Um, Perfect. Traders, thank you so much. As always, stay sharp, stay focused, and trade smart. I'll see you next time.